to imbalances, right? Imbalances. What are imbalances, right? This is part of, the smart money concepts. It's a part of structure. It's a part of Wyckoff to a degree. But this essentially is when the market is moving so fast that there's no time for anyone to go in there and buy or sell, because it's so much liquidity is being introduced, so much volume and volatility that price creates these imbalances, right? And an imbalance, anytime you have a candle, right? Think of a candlestick, right? This is a candlestick, okay? And you have the low, you have the open, the high, the low, and the close of every candle, okay? Let's say this is a bullish candle right here. It opened here. The high is up there. The low is down here. And the close is right here. All right, so let's just do that again. The open of the candle is down there. The close of the candle is up here. The low is this wick. And the high is up there. That's basic candlestick anatomy right there. This is a bullish candle. So we can, and then for a bearish candle, same thing but in reverse. Right, if this was bearish, then the open would be at the top. And then since it's bearish, it goes down. The close would be down there. Okay. And then the low of the candle would still be there and the high would still be up there. Right. And then let's say you have another candle next to it. Boom. Okay. And then let's say you have another candle next to that. Let's go ahead and fix this actually. Boom. And then let's just do it like this. Boom. All right, but just think of an imbalance as essentially 3 candles, but we're going to use 4. It doesn't matter. Technically, every single candle should be connected in the middle. Every wick should be connected in the middle. And what I mean by that is that these wicks should connect. So you see how these wicks, if I draw a horizontal line from these wicks here, they connect. That means that this candle here is balanced. That's how every candle should be. That's healthy price action. But as we come lower, we see if you draw a horizontal line, these wicks are not connected. They're not connected. There is a gap in the middle. There is an imbalance. This right here, the previous candle, these wicks right here and here were connected via horizontal line. Right? That's a balanced candle. That's healthy price action. As we get lower, the wicks don't seem to connect. Right? So now we have a gap. We have imbalance in the market. Right? That's because price was moving so fast to the downside, so much liquidity, so much volume to the downside that no buyers had a chance to get in here. It was selling off so bad that no buyers had a chance to enter the market right in there. And then when it comes to an uptrend, let's do the same thing. Let's say the market is uptrending. You have your wicks, just like we talked about. Same thing. Go ahead and connect it. And then, boom, duplicate that. Boom. And then duplicate that. Boom. Boom. All right, similar situation. This time, let's say the wicks on this one, they don't connect. Similar situation. This is an uptrend now. Boom. Draw the horizontal line there, and then I draw it here. There's a small little gap here where sellers never got a chance to sell because it was buying up so aggressively. No sellers were able to step in and sell here. So that's an imbalance. That's a gap. So sometimes the market likes to come back into these zones and use that as an entry to continue price higher. So don't be surprised, in a downtrend, you see price making, there's lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, and all of a sudden it comes back into this imbalance, does the liquidity dance, boom, and then sells off. All right, that's very common. Very common. Same thing for the buys. Don't be surprised if you see price, after making a series of higher highs and higher lows on an uptrend, come all the way back down to this mini gap here and do the little dance. Boom. And then continue higher. Right? This is what happens very, very often. And typically after you see the setup here, the accumulation or the distribution, and then it does take off, what happens? It creates more imbalances. It creates more imbalances as it moves. It does the same thing again. And then the same thing for the sells. It creates more imbalance to the downside as price moves. Right? It's very, very common. So this is what happens in the market over and over and over again.